Hi, I'm Batu from FinCal, and in this video, let's take a look at SBI Equity Hybrid Fund. It's a very solid performer, as we shall see, but should you invest in it is a question that we have to ask. This is one of the oldest hybrid funds in India. It was started on December 31st, 1995, and currently this has got the highest AUM among aggressive hybrid funds. So this is the AUM growth of the fund, and at the bottom you see the month-on-month change in the AUM. So the AUM growth is the orange line that you see here. The NAV growth is the blue line that you see here. This is shown in logarithmic scale. That's why it looks a little funny. And you can see here, month on month, the AUM growth has been independent of the NAV growth. See, because whenever the NAV increases, it means that the stocks or the bonds increase in value. When they increase in value, the AUM also will grow. But then the AUM has got another component in it coming from inflows, and outflows can reduce it. So whenever there is not much change between the AUM growth and the NAV growth, it's investing in the fund. But when the AUM growth is independently higher or growing at a rate different from the NAV growth, that means a lot of people are investing in the fund. And you can see in this region right here, between early 2014 to about end 2018, the NAV started moving up a lot. In fact, it grew 10 times in this period. And I also have another example in the review. You can have a look at it. So this is the historical asset allocation of the fund. The blue is the debt portion, the bonds portion, the orange is the equity portion, and the cash or any other arbitrage holdings would be listed as others. You can notice that it is typically the fund has got about 20-25% of bonds at all times, and the rest of it has got about 65-70% of equity. This kind of graph is important for you to understand how the investing style has been over the past. You understand that it's been more or less steady investing style in terms of asset allocation is concerned. These are the types of bonds held in the fund. The blue is the government securities, the orange is the corporate debt, the cash and other net assets and other equal and small cash is essentially gray. The yellow is certificate of deposits, bank deposits. You can see here that the government securities grow almost to about 20%, then it falls down, then it moves up, and so on. So there's some kind of tactical asset allocation here. There is a fund manager is playing the so-called duration call. That is, whenever he expects the returns to fall, he puts in more in gilts, and then when the rates have fallen, after the rates have moved up a lot, and expect to, I mean, he's essentially booking profit, right? When the rates are expected to fall, you expect your current bonds to become more valuable, so you must have higher asset allocation when that to gilts when that happens, and then when the cycle reverses, you book profit and so on. And this is the credit quality of the bonds that you see over from September 2009 onwards. You can see, of course, the sovereign is the dark blue. The what matters more is this green portion here. The green is the less than AAA rated securities, and that's one step lower than AAA. The AA plus, AA minus, and so on. That's kind of significant here. So that's a problem. In case there is a default, it would affect the NAV. Of course, the impact on the NAV will be very small, because already it's going to hold only 20% of bonds. Then there will be many bonds, so each bond will be about less than 1% typically. So it won't have much of an impact even if the whole thing defaults. So don't worry too much about it, but just saying it's possible. So these are actually the kind of defaults that I've seen in the fund has seen from January 19 to August 19. Tata Motors have gone from AA to AA minus. IFCI have gone from BBB plus to BBB. Reliance Home Finance have gone from AA to C. United Bank of India have gone from AA minus to AA plus. I think that that is still a downgrade. Sequator Media Services, is it part of Reliance? I forget. A1 plus to BWR A minus is bad. But then again, the holding has been more or less very less. You can see the holding is 0.3%, 0.12%, 0.08%, and so on. It's not such a big deal. I mean, even if you remove all that money out, complete default, it's just going to not make a big difference in the NAV for a aggressive hybrid fund. So don't worry too much about it. As a matter of fact, it's important for you to know that these things are possible, not just in SBI fund, any hybrid fund. This is the change in the expense ratio of the regular plan, the red ones, and the blue is the expense ratio of the direct plan. And you can see the percentage, month on month percentage change in the AUM is shown in green. There is some link between how the rate at which the AUM is growing and how much they suddenly spike up. Look at the spike in the regular plan and the dip in the direct plan. And this corresponds to a spike in the AUM. I think there is some relationship between the two. I have to dig this up much more in some much more detail. I will do that in the coming months. We'll see how that goes. All right, so you can see that from mid 2016 onwards, the current total expense ratio of the fund for the direct plan has actually increased. That's not a good deal. So now let's look at the performance. These are 10-year returns, 864 data points in the blue line, which is the SBI fund. The blue line is Nifty 50, and the white line is the SBI fund. Notice that the SBI equity fund has comfortably bet Nifty 50, although it's not supposed to. It's only holds 65% stocks. It can comfortably beat Nifty 50 over a 10-year period. It's no problem at all. And this is over 5-year periods. Again, that's more or less all right. It's been staying close to Nifty 50 here, and it has outperformed Nifty 50 here. And the green line is the CRISIL hybrid index, which is 65% Nifty and 35% of bonds. Notice that the CRISIL hybrid index itself is more or less similar to the Nifty 50 in terms of returns over 5 years. Now, over comparison with peers, the Nifty is in blue. The white is the SBI fund, the pink is the HDFC hybrid fund, which is HDFC balanced, ICICI balanced or ICICI equity and debt fund is the brown fund, the yellow line is the Franklin India hybrid fund or Franklin balance. Obviously HDFC balanced or HDFC hybrid is spectacularly well above all the others. Next comes ICICI, not much difference between SBI and Franklin. Although independently, all of them have bet the Nifty 50. Again, over 5 years, that's the similar kind of scenario. HDFC has done better, ICICI is the second, Franklin and SBI more or less similar. So, in terms of risk, you can see that this is the rolling risk, that is monthly. We take over a 5-year period, we look at monthly returns and we find out how individual monthly returns how much they deviate from the average return, and higher they deviate, the higher the line will be, the higher the risk. So the highest line is Nifty 50, that's got the highest volatility. All the peer funds and SBI fund are here. The lowest volatility is HDFC equity, HDFC hybrid equity. Notice that the CRISIL hybrid fund has got the lowest volatility. So in terms of risk, the hybrid funds are have comparable risk to CRISIL hybrid equity, but beat it comfortably. But in terms of Nifty 50, with respect to Nifty 50, they have significantly lower risk and are also able to have the potential to beat it also. So it depends on which benchmark you use, but it's quite favorable. So in summary, this fund has got a very good record. There's nothing wrong with it. Definitely existing investors can continue holding it. Only problem is current AUM is high, and next time there is a bull market and so on, because SBI has got a bank associated with it, they will start pushing this fund and then the AUM again swell up too much. So that's the sudden influx in AUM is a problem. What happens, say, when there is a sudden influx in the AUM when the fund has got 2,000 crores is one thing. But sudden influx when the fund has got 26,000, 27,000 crores, I don't know what will happen. It can be difficult times for the fund manager. The third problem is expense ratio. Although the fund has got amongst ICICI, HDFC, Franklin, this fund has got the lowest expense ratio. But if you look at Mirae Asset, it has got just 0.24, 0.2%, whatever for its hybrid fund for the direct plan. That looks quite enticing. Also, the performance has been reasonable there. So that's a problem there. I have a review for Mirae Asset as well. You can watch the video or see the link. So that's the problem. The AUM is a bit high. The expense ratio is not very favorable. But in terms of performance, SBI, HDFC, SBI, equity hybrid fund has done quite well. There's nothing to really complain about. So that's what I want to say in this video. I'll catch you. Oh, sorry, this is my son's spacecraft. So I'll catch you again in another video. Bye bye.